Today, we'll learn about Voyage Account, a special account used by shipping companies to find the result of each voyage. If your business involves transporting goods by sea, then the Voyage Account is your compass. It shows whether a particular trip or voyage made a profit or a loss. In this video, we'll break down what a Voyage Account is, why it's prepared, and how to calculate profit from it, with simple examples. A voyage account is a special type of nominal account prepared by shipping companies. Each voyage, that is, each journey of a ship from one part to another, has its own separate account. It's similar to a trading account, but instead of recording goods bought and sold, it records all the expenses and revenues related to that particular trip. At the end, it helps determine whether the voyage resulted in a profit or a loss. The purpose is simple: to find out how profitable each trip was. Shipping companies often run multiple ships or multiple routes. By keeping a voyage account for each trip, they can compare performance. For example, is the Lagos to London route more profitable than Lagos to New York? Which ship is operating efficiently? It also helps management make decisions about fuel use, freight rates, and scheduling. Just like any account, a voyage account has debit and credit sides. On the debit side, all expenses of the voyage, bunker cost or fuel, wages and salaries of the crew, port charges and dock fees, insurance, depreciation of ship for the period of the voyage, loading and unloading expenses, provisions and stores used during the journey. On the credit side, all incomes from the voyage, freight earned from carrying goods, passage money from passengers, primage, an additional charge on freight, insurance recoveries, if any. After recording everything, we balance the account. If the credit side is greater, there's a profit. If the debit side is greater, there's a loss. Let's take a simple example. A ship owned by Ocean Blue Limited makes a voyage from Lagos to London. Here are the details. Freight earned $80,000. Passage money $5,000. Bunker cost $20,000. Crew wages $10,000. Port charges $5,000. Insurance $3,000. Depreciation of ship $4,000. The expenses are bunker cost, crew wages, port charges, insurance, and depreciation, while the incomes are freight earned and passage money. Now, total expenses equals $20,000 plus $10,000 plus $5,000 plus $3,000 plus $4,000 equals $42,000. Total income equals $80,000 plus $5,000 equals $85,000. Profit on voyage equals $85,000 minus $42,000 equals $43,000. So this voyage made a profit of $43,000. The balance of the voyage account, that is, the profit or loss, is transferred to the profit and loss account of the shipping company. If the voyage isn't yet completed at the end of the accounting year, we prepare a voyage in progress account, which carries forward the uncompleted portion to the next period. A voyage account is much like a trading account, but with a few key differences. It deals with services, transportation, not goods. Each voyage is treated separately, while trading accounts usually cover an entire year. Voyage accounts include special items like primage, passage money, and ship depreciation. For students, voyage accounts help you understand cost allocation and revenue recognition. For business owners, it's a performance tracker, helping identify profitable routes and cost-heavy voyages. It's also used by investors to assess the operational efficiency of a shipping business. To sum up, a voyage account is a short-term performance statement for each sea journey. It lists all incomes and expenses, balances them, and shows the profit or loss for that trip. Understanding it helps you see the financial heartbeat of every voyage. Don't forget to like, share, and subscribe for more accounting lessons made simple.